Valve finally revealed their highly anticipated Steam Machine hardware, but instead of celebrating, the gaming community stared at a surprisingly high price tag, a base model starting at $1,049. The sticker shock hit hard because earlier expectations set Valve's target price at $750. Consumers were instead asked to pay well over $1,000, scaling all the way up to $1,428 for the 2-terabyte retail model. To put that in perspective, Sony's PlayStation 5 Pro delivers a premium living room experience for exactly $699. And if you look at the standard Xbox Series X, the alternative drops down to an even more economical $499. Valve's official defense for the markup is that the Steam Machine isn't a traditional console. They argue it's a specialized gaming PC packed into a living room form factor. But the true culprit driving that cost has nothing to do with form factor. Between late 2025 and mid-2026, memory costs spiked 300 to 400% in just 6 months, a supply chain catastrophe known internally as Ramageddon. The $1,049 price point reflects a specific economic shift. The Steam Machine is the first high-profile victim of a supply chain that can no longer prioritize the average consumer. If we rewind to late 2025, builders were living in a golden age. Component supply was abundant, and you could easily buy a 32-gigabyte kit of standard consumer DDR5 memory for under $100. Then the artificial intelligence boom reached critical mass. Suddenly, tech giants needed immense amounts of physical hardware to train their massive language models. Training an AI requires running complex math across thousands of chips simultaneously, a technique known as data parallel processing. Data centers have to shuffle terabytes of information back and forth rapidly without creating a bottleneck. As this chart shows, comparing standard consumer RAM to HBM, a single HBM unit generates a profit margin 3 to 4 times higher. When companies like NVIDIA place massive multi-billion-dollar orders for AI components, memory makers see those towering profit margins and act accordingly. The tech industry crunched the numbers and realized that dedicating factory space to PC gamers was a financial loss compared to feeding the incredibly lucrative AI machine. This hardware pivot exposed a deep structural flaw in global tech manufacturing. There is virtually no competition in advanced memory fabrication. This global DRAM market pie chart shows 3 companies control advanced supply: Samsung at 42%, SK Hynix at 38%, and Micron at 20%. Chasing the AI gold rush, all 3 synchronized, transitioning their assembly lines from consumer RAM entirely to HBM. That pivot triggered a massive drop in consumer components. Almost a quarter of all global memory production capacity was suddenly absorbed by the AI sector. We hit a classic economic squeeze. With the global supply of consumer RAM plummeting while everyday demand remained static, the cost of memory went into a violent upward freefall. The entire consumer electronics market found itself completely at the mercy of 3 manufacturers, who logically prioritized their most profitable corporate clients over everyday buyers. The Steam Machine was just an early warning sign. Soon, the pricing crisis spilled out from specialized gaming hardware and infected standard productivity devices. This graphic of a laptop's internal components illustrates the damage. Notice how the RAM module's share of the total manufacturing cost expands from 12% up to 35%. When a single part swallows a third of the budget, manufacturers must pass that cost down. That component explosion directly resulted in a mandatory 15 to 20% price increase on mid-range laptops built for students and office workers. The contagion spread further. Flagship smartphones from Apple and Samsung saw retail hikes between $50 and $100, and standard living room consoles quietly bumped up their base prices. You don't need to be a PC gamer to pay this AI tax. If you buy any device with a microchip, you are absorbing the cost of that corporate pivot. The immediate question is why these companies don't just build more factories. The reality is that constructing a new fabrication plant takes 2 to 3 years and requires up to $15 billion in upfront capital. Industry leadership has been starkly honest. Speaking on stage, SK Group Chairman Che Tae-won outlined a highly pessimistic reality for the supply chain. The memory shortage is officially projected to persist through 2027, with executives warning the bottleneck could easily drive on until 2030. If you have to build a PC right now, your best survival strategy is starting with a minimum viable setup. Buy 16 gigabytes of RAM to get the system running, and plan to upgrade much later when prices eventually stabilize. For many, the smarter economic fallback is abandoning the custom PC route entirely. Closed system consoles offer massive protection from the wild inflation of individual computer parts. With 3 companies controlling 100% of the high bandwidth memory market, the price of our electronics now depends entirely on whether there's any production capacity left over after the AI giants have taken their share.